Welcome everybody to our latest Quantacast. My name's Tim MacKinley and I'm the CEO here at Quanta. I'm joined on my left by Chris Carrigan.
G'day.
Nice to have you here, Chris. And on my right, Stacey Jones, our CEO. Welcome, Stacey.
Thanks, Tim.
We're coming from a different environment today. We're in our brand new offices in the middle of the Brisbane CBD. How have you found the offices so far?
It's fantastic, Tim. It's really a good contemporary office that our teams are working well and everyone's set up so that we can collaborate well and work together to get really good outcomes.
Yeah, look, we've always had a great culture, but the vibe's really picked up, Stacey.
Yeah, it has. It's a premises that is really inviting and really well suited for the teams to work together. Great collaboration across the office, and great for this to be our new home for the next 5
years.
Or more.
We are here to talk about 91 Connors Road in Paget in Mackay. We visited the property very recently and very impressed with this asset. Well, two buildings on this property. So, Chris, talk to us a little bit about what's happening at Connors Road.
So Connors Road is a great industrial investment that we've found for our investors. It's a land-rich, single-tenanted building that with a great tenant, long-term lease. It's really under-rented, so we think there's great rental upside and therefore great capital uplift. We're buying it very well at a market yield of 8.3%. So we're looking forward to bring this one to investors because we think it's pretty compelling.
I did when we went to look at the site. We circled it quite a bit, and there's a lot of activity there, Chris. I wouldn't quite say a village of dongers, but there's a lot of external buildings, temporary buildings there, which tells me they're fairly full up, but there's a lot of land there that we can do further things with for them on a more permanent basis. There's a lot of people on site. There's a lot of cars parked on the site. It's a facility for a UGL that is quite specific to various. What need is it there, Chris?
So Tim, the tenant is UGL, which is a great tenant. They're ultimately owned by a multinational company, Germany's largest builder, with a $12.5 billion in Australian dollars market capitalisation. Great tenant. What they do there is recondition heavy equipment that's predominantly for the mining industry. This facility is the Queensland facility for UGL. There's also a New South Wales facility. So all items that need reconditioning in this territory come to this location. It's got specialised equipment in there. It's got some specialisations that the New South Wales facility doesn't have. So some items get sent from Sydney up to Queensland. So look, it's a very good facility. We inspected it the other week. Very professionally run. And a very busy operation.
So on the 3.1 hectare site, Chris, there's actually two buildings. Are they of equal size, and what sort of square metres do we have under roof there?
So combined, there's just under 9,000 square metres of lettable area. That both materially, both buildings are the same size, but one of the buildings is for mechanical engineering, and the other building is electrical engineering. So it's different processes in each, and then there's a hard stand for storage of certain materials and some logistics.
Okay, great. Stacey, I'll bring you in. What's your first impressions? You went and had a look at the site as well. What do you think on your first look?
Very well kept, very tidy operation. As Chris said, very professionally run. Some of those industrial properties you can walk in and it can be a bit of a dog's breakfast in there, but no, that place, they clearly have a very keen focus on workplace health and safety because everything was where it should be. Incredibly busy, lots of work on. The tenant representative who showed us around was very complimentary of the site. They've been there for a significant amount of time. It works well for them. High investment in terms of the machinery and equipment that is in there, and relocating it would be very costly. Works well for them. It was a very impressive site and a very impressive tenant.
Great. So thanks, Stacey. So let's have a look at the metrics, Chris. $16.7 million purchase price.
Correct.
Day one distribution for our investors of 7.5% with a an average of 8.25% over a 5-year term, and then the horizon again will be 5 to 7 years, I presume,
Yes.
And closed-ended, the fund. 100% leased, 4.8-year whale to we said UGL. Site covers about 27%. So CPI increase of CPI annually plus 1%.
Yep.
So it really is, and again, distributions are 7.5%, averaging 8.25 over 5. That's very strong for, again, industrial.
Yeah, yeah. I mean, we've been really keen to find investors a high-yielding, secure industrial asset with rental upside, and we've found it in this. So the rent paid by the tenant is $141 per square metre. The market is $160 or $170 a square metre. So the strategy here is to enjoy the 8.25% average distribution on the way through, renew the tenant at the end of their lease, revert the rent to market, so bring it up to the 160, 170, which will improve distributions, improve capital value, and then prior to that 7-year expiry of the term, sell it for more than we bought it for.
Look, it looks like very good value, and as I said, I had a look at the site as well. Help me understand, is there some capital works for the current tenant that are happening now or going to begin?
Yeah, look, as part of the deal, there's $1.5 million dollars being spent on capital improvements to the building that is being paid for by the vendor, and that's part of the lease agreement with the tenant.
Thanks very much, Chris. Great information. Stacey, at 16.7 million, we should raise this quite quickly. We know there's demand there from our investors. Do you want to talk a little bit about how we establish where that demand is from our investors?
So every year we conduct a survey of our investors, and in between, of course, we're actively talking with investors, either through functions or when we're speaking with them on the phone. And overwhelmingly, the preference is for industrial assets, and it's just been the case that we haven't been able to find an industrial asset that would present a return that would be favourable to our investors previously. So with that in mind, I do expect that this one will go pretty quickly. Not a sales tactic, but I wouldn't delay. This is something, if you're keen on it, get in contact with Dave, register your interest early. It'll, of course, come out, we won't take official registrations until the IM is released, but I do think it will go quite quickly. Similar to our ones before, it's got a 7-year term, so fixed term, single asset, certainty as to what you're putting your money into, and a time frame as to when we intend on exiting.
Thanks, Stacey. Chris, over to you. Tell us a little bit about the location in Paget. So
Paget is around 6 kilometres southwest of the Mackay CBD. It's Mackay's premier industrial precinct. It's got great access to all modes of transport, close to the highway.
And Chris, also to add to that, just in our driving around the Paget precinct, you can see whilst there's some land available, from a standing building point of view, that they seem to be overflowing with activity and people and machinery, etc. on these sites. So what's the market like in terms of vacancy there?
So from our time up there, yeah, Tim, for built product, it's very low vacancy. There's a lot of good tenants up there, and it's a really good market for us.
Thanks very much, Chris. So I'll just go over the metrics again one more time for our investors at home. $16.7 million purchase price, day one distribution of 7.5%, 8.25% average over 5 years, 100% leased with a 4.8-year whale to single tenant. There's some built-in rent increases year on year, CPI plus 1%. We know there's some capital works that are going to be done on site, which is hopefully concreting or cementing the tenant there for many years to come. And we know that the site's on the lettable area is only covering 27% of the site, and it's a 3.1 hectare site. So it's a very, very good product for us to put out to our investors. Again, it was another great one for us to inspect and look at, and we're really pleased. So I think on that note, Chris, thanks very much for being with us again today. Stacey, thanks for being with us again today as well. And we look forward to bringing our next Quantacast to you soon.